So you missed the boat on AI or you wish you doubled down. In this video, we are going to talk about the next big trade. You came here for the truth, so let me unveil that for you. We are going to look at the next big investment right now going on, and you will see BlackRock talking about it and many others. It's kind of obvious, but I need to present that to you today. I'm going to give you all the information that you need, and we'll look at why this is the case, beginning with power demands of AI present huge investment opportunity. That's according to BlackRock's Think. AI is capital intensive, compute intensive, and energy intensive. This is, of course, General Atlantic at the WEF, the World Economic Forum, talking about it. We need to understand that what we have today, the energy that we can produce today, is not enough. So if we are expecting AI to advance, it cannot do so. It is impossible. It cannot do so without more energy. And if it becomes more expensive, then suddenly things start looking very different. The development of artificial intelligence with its significant power consumption is raising questions about impact on the energy prices and the grid. That's what Fink has said. This also talking about the fact that there's potential challenges. The need for increased infrastructure presents a huge investment opportunity. The amount of power that's needed has a huge impact on society. Where's that power going to come from? Are we going to take it off the grid? What does it mean for elevated energy prices? Forget about the use of it, but just the generation of it requires massive power, but that is a huge investment opportunity. And so we have to start looking at it, and they didn't say, but I think it's pretty clear when you start to think about what's going to power this. Is it going to be wind turbines that are going to power this? Is it going to be solar? Is it going to be geothermal? Or is it going to be nuclear? And of course, we'll probably see more of all of that, certainly. But we have to be honest about it. We got to see what they're telling us and follow the money. Well, that's what we'll do today. We're going to follow the money. So we start with BlackRock. That's the big money. Once unthinkable, nuclear plant revival is a reality in U.S. shift. Restart of Michigan's Palisades plant could lead to more reopenings. That's not the only place. We're seeing, my goodness, Fukushima? Like, what's going to be next? A month after the U.S. offered $1.5 billion to restart one shuttered nuclear power plant, there's a growing sense among officials in the industry and government that it may not be the last. There are a couple of nuclear power plants that we probably could and can turn back on. So, of course, we will see this. They are talking about this widespread. It's happening in Canada. It's happening in France. It's happening all over the place. A lot of the other players that have nuclear power plant had recently shut down that could be turned back on and are gaining the confidence to try. Now, I don't know if these are safe. I'm not talking about the safety factor, all right? Because a lot of these are the old style, right? These are from like 40 years ago. This is not the new stuff. The new stuff apparently is much, much better. But in the meantime, we have an issue. We've got this AI, we've got population moving out of the rural areas into the cities. This is going on globally. We've got people just overall using more energy. All the stuff we have uses more energy. And whether that's going to come in the form of, natural gas, whether that's going to come in the form of, nuclear or whatever, we need more energy, right? Okay. So that's that. Look at this. You could see, I've been talking about nuclear and specifically uranium as the play on this since 2020. So if you're new to the channel, I've been talking about it on here. We can have some people verifying that if you'd really like, but just you can go back to 2020 and I've been talking about it. But certainly there have been names, and I only mention because I don't give financial advice, but I did mention Cameco as being one just because they're the biggest. All right. And so you could play this in a few different ways. You could buy a company like Cameco. You could buy the physical. You could buy a combination of both. It's dependent on how you want to play it, but understand where the value is being presented because of the changes that are going on. The governments are saying we need more energy, and this is what we're going to do. There is now trillions of dollars being invested in this. So we have AI, right? But there's something else. Hang on for a second here. Typical data center without AI demand, 12 kilowatts. Data center supporting AI in training phase, 80 kilowatts. Data center supporting AI in inference phase, 40 kilowatts. So just understand, you suddenly add AI in there and the power demand skyrockets. You see what I'm going with this? Okay, we don't know if that's going to be the actual case, or if it's in one place, if it's in another place, what technology they're using, all that stuff. That's the fine print, but just understand that the power usage goes up considerably. Data center power consumption by providers or enterprises in the gigawatts, going from 2014 up into the future. Look, we're going to need more power. That's all I know. We're going to need a lot more power. Whether or not the current AI is going to be like the future, I don't know. Look, we just need more power. And we have something that could provide a lot of power potentially. This is some of the plays that are available. I'm just going to put this here for you. Goldman Sachs, I'll show you something Goldman Sachs provided in just a second, but you can take a screenshot of this if you'd like. You could do your own research on this. You'll see Cameco in there. They kind of broke it down, its own little fund. So shout out to Finance Friday live crew. Maybe we can cover this on Friday if you're interested. And of course, Spartan specifically. Shout outs to Spartan. All right, looking at this data center equipment. So you even have the companies providing the electrical components, the REITs, which is huge, by the way. That's the one, like a lot of REITs are not good, but that could be one that's interesting or exciting. You have semiconductors, all that stuff. So it's not just one aspect. You've got tons of different ways to play this. And I would say don't go all in on one. Spartan. Okay, look at this. Broad AI, looking at that, Power Up America, and data center equipment. So these are others, again, screenshot if you'd like, but we're just trying to see where investments could be in the performance over the last while, how they have done it. I think always better to have a variety, even if you think, hey, well, this is the way it went. No. We want that variety, okay? So I'm trying to give you as much information as I possibly can. I'm trying to provide you with that. You got to do your own digging, okay? But I just think there's something very clear where the governments are sending billions and billions and billions globally into the trillions into this stuff. So we know it's AI. We know more power will be necessary just in general. And they're even saying, hey, we need to get clean and we are restarting our nuclear plants. Come on, let's be honest. What's going on? This is a chart, infographic, 9 critical energy minerals for investors. Wanted to show it to you. You could see electric vehicles, wind and solar, and nuclear. Let's go from the nuclear. It's not just uranium, but also nickel. For wind and solar, you got silver, copper, nickel, manganese, rare earths, and then for electric vehicles, lithium, graphite, and cobalt. So just wanted to break that down because people hear about, the one aspect of it. You should know a little bit more on that, okay? So you can dig in. All the links for today's video and all my videos are in that right at the bottom. Basically, there's a sources link where you can click on that. Just keep in mind that just because, like in the case of silver, just because something is being used a lot, that it's in demand a lot, doesn't mean that the price necessarily goes higher. All right? Of course, there is supply and demand always, but you can have a case where silver has been subdued for a very long time, even though in the last little while it's performed well. JP Morgan warns of delay to the global energy transition. All right, inflation, interest rates, and wars may well delay the energy transition by quite a long time. This is the shift from what they call the hydrocarbons to the alternatives. I don't know exactly what's going to happen here, but you got to keep in mind what's going on, that they are pumping in the billions of dollars. Is it going to be in the wind and the solar, or are they going to start investing more into nuclear? I think that's likely to get the biggest bang for their buck. There's just a problem though. If they want to today, to say, okay, we agree, we want to build more nuclear. Well, they agree to it today. That's 5-10 years down the road by the time it actually comes online. So there's this big gap. When you see all the predictions and estimates and everything by, think about it, 2034. Oh my goodness, it's the Jetsons. We're flying around, flying cars, and drones are delivering everything, not without energy at a reasonable price. So keep that in mind. I hope this video was valuable to you. Of course, you can share this with people if you thought it was good. I want to tell you that the Finance Friday live crew gets all of this information broken down every Friday for 2 hours plus. So, if you want to join that, if you're just interested in it, you can always just reach out to me. And there will be a link at the top of the description where you can join up or just find out some more information. This is the page right here to take a look. There's a short video and then a lot of information down below for you to read. Click that link. And don't forget to hit that thumbs up button on the way out. I'll see you back here tomorrow. Take care.